With sideways consolidation and falling volatility, it is obvious Bitcoin is soon to make its next directional move. We're going to talk about that today, as well as the technicals for the larger time frame, discuss the price action, and talk about the possible reversals. Let's go ahead and dive in. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning into today's video. I hope you're all having a fantastic day. We're going to go ahead and jump into the charts today, talking about Bitcoin, talking about the price direction, where we will see the price go over the next 24 hours and further. We're also going to do a larger time frame technical analysis today, zooming out a little bit, taking a look at the larger time frame, the daily, the weekly, the 3-day, talking about the technicals and price direction. Let's go ahead and dive in. But just before we get into it, smash the like button, hit the comment button, and subscribe to the channel if you aren't new for daily videos such as this. And of course, second link in the description below will get you access to our free Telegram channel. Videos, charts, analysis, updates, you name it, all in here, guys. And of course, if you want access to our VIP channel, you can see all of our monthly results. So here, you can contact me for more information. So our VIP channel here, 510 members. As you can see, let's take a random trade signal here. We do entries, targets, stop losses, gains, all you need to know. And we do have a group chat as well. Let's dive into it. So we'll start with our market data as usual. Negative 19.5 for November so far. Again, we saw a little bit of a pullback since yesterday's video. We did a video yesterday while Bitcoin was just rejecting from this point. We said, this is a key rejection point for Bitcoin. We're looking for shorts here until this level breaks. And we'll talk about that later in today's video. But we have seen a little bit of a pull down, not too much, about 1.5% since then, down to about 16,500, coming down to that retest, that uptrending support line. So we have seen Bitcoin come down a little bit. Of course, for the quarterly, we are still negative 15. So looking pretty bad, guys, with 5 days left in the quarter. It's pretty good chance we're going to be closing out quarter 4 red. And that will be our first red consecutive quarters for Bitcoin in history of Bitcoin's lifespan. We've never seen 4 red quarters back to back. Pretty bearish there, pretty negative, not very nice to see. Volatility has been dropping, and we can see this on the smaller time frame. We just go ahead and zoom in here. We can see we are dropping a little bit in the volatility. We hanged around 4-ish for quite some time. We pushed up to about 4.2. Obviously that was during this drop down. We saw this 4.2 push in volatility. Again, volatility represents price action. It tells us how volatile that price action is going to be. So if we see more volatility, we generally have larger percentage moves on the price action. While we're in this consolidation, our volatility was plateauing, okay, if not dropping. When we were compressing and consolidating, we had that breakdown, we had that burst in volatility. We're back in this consolidation zone, so the volatility will be dropping once more. That is what we're seeing. And finally, guys, moving on, liquidations are very low, meaning, again, not a lot of volume in the market. We only got 39 million 24-hour liquidations, so very, very small amount of trading right now. Again, when we are compressing in these tight ranges, as of now, we generally have not only lower volatility, we have lower price swings, and therefore we generally have lower volume, so less money is being traded in the markets. Very normal, very classic. And again, as we approach apexes of patterns, we generally see that compress before these next directional moves, whichever way it may be. So let's go ahead and talk about the broader markets, and then we'll come and discuss Bitcoin in the short term, and then we'll do our macro analysis. There's actually a question, a community question I do want to answer at the end of the video, which is, what do you do to help with being patient while trades take its time to develop? So essentially, what do I do waiting for trades to develop? I've entered a trade, and how do I manage my emotions, and is there anything I actually do to keep myself calm while waiting for trades to play out? We'll talk about that at the end of the video. Let's go ahead and get into the overall market. So we have the DXY over here, and we talked about this yesterday. We said we do have a support zone that we are coming up to, which is 105 to 105.6 minus support level. We did, of course, have this rounded bottom formation here. We broke to the upside. We failed to remain above that 107.5 trigger zone. We actually crashed back through it, coming back down, crashing back through 106, and now we are finding support once more over here. Okay, as we already know, guys, the DXY is inversely correlated to the stock market. And the stock market has a 0.7 degree of correlation to the cryptocurrency market, and therefore it is inversely correlated to the cryptocurrency market to a degree of 0.7. Therefore, if the DXY drops, we generally see cryptocurrency rise in price. the DXY rises, we generally see the DXY fall in price. If we go ahead and look at the year to date for the DXY, which is the last 4 months, we've seen a rise in DXY, we've seen a drop in cryptocurrency. Pretty straightforward stuff, guys. So if we do see a drop below this level, we can expect a rally to continue for crypto, and that will enable a break up through 16,800, potentially to 17,300 and 18,100 for these high points. Of course, if the DXY does reject, find support, and push upwards, we will see a continuation back down to this level, which is ultra bearish, and we'll talk about that in today's video, of course. Moving on, the total cryptocurrency market cap has been struggling a little bit here, and as we can see, delete this line, we are coming up on a point of higher historical trading volume, and of course that does correspond for Bitcoin at around 16,800. There's a resistance level here. It's quite a strong resistance which has developed over the last 21 days. As you can see in the total cryptocurrency market cap, that level is now resistance, indicated by that peak in the VRPV. Again, the VRPV, what it is suggesting, it's suggesting historical volume over a horizontal range. Okay, so if we bring up the standard volume, we see volume bars over here. That indicates what is the volume over a vertical level. Okay, this is indicating what is the volume over a horizontal level at a particular price range. Okay, so it's indicating supports and resistances. It helps us define supports and resistances. So we can assume that unless we get above, we're looking at around 795 billion over here, we're likely to see a rejection. Until then, if we do get above, we can see a push upwards, but of course Bitcoin will need to claim that 16,800 simultaneously to see that occur. S&P 500 has pushed over the 34,000 level. Again, we're looking for that move upwards if the DXY continues down, otherwise we will reject. As Dow Jones, this is S&P 500 here. We're looking for that move upwards towards this rejection point. Otherwise, if we do lose this level again and lose these lows, we can expect a continuation towards the downside. So again, not looking too shabby for the S&P and the Dow Jones. A lot is resting on the DXY here. We do have these support zones we can define over here. Again, just to go over it one more time, we are pushing past a major horizontal resistance, that 4,000 psychological resistance. The next resistance level is here. To confirm a breakdown, we will actually need to lose this low point. So losing 3,953 will result in a move continuing back down. Okay. Bond yields are leading, all right, they're leading, they're telling us what the DXY is going to do, of course, and they are looking like they're moving down, so we can assume the DXY is going to follow. Let's go ahead and dive into Bitcoin, however. So, a few things we want to talk about first and foremost. Short-term price action, and we talked about this yesterday. We're going to reiterate what we were discussing yesterday, because we are in the same spot, okay? And then we'll go ahead and answer that question from the YouTube subscriber, and then we'll go ahead and do our larger time frame analysis and bring up all of our technicals and go over some new stuff. So, what will it take for Bitcoin to move upwards? And first and foremost, actually, guys, let's go ahead and define the structure we are in. So right now we are in a pennant formation, okay? A pennant formation over here. Now, pennants are generally less than 2 or 3 weeks, okay? So any consolidation phase where you have lower highs, okay, and higher lows, we have a triangular pattern. And triangular patterns that have these equal patterns may basically sideways consolidation, so they're not slanted towards the downside. Okay, we have one converging down, one converging upwards. They're generally either symmetrical triangles or pennants. Okay, now symmetrical triangles are larger time frame pennants. That's all they are. Okay, we generally see symmetrical triangles occur on the much larger time frame. We're talking 2 or 3 weeks plus. Pennants do, however, generally have distinct characteristics, and one of them is a flagpole. So we generally see aggressive moves into pennants, and this can occur in a very small time frame. This can occur on an hourly. It can even occur in a larger time frame. But again, if it's less than 2 or 3 weeks, we generally assume these are pennants. So pennant formations are neutral patterns. Okay, this is very much a neutral pattern. It's a sideways consolidation. We're coming to the apex at the moment. Now we are expecting a directional move at some point. A directional move will need to occur out of this market structure. The directional move to the upside, and by directional move we mean a reversal of this entire zone. Okay, directional moves are macro reversals, or depending on what time frame you're on, reversals of structures. Okay, reversals of zones, reversals of structures. So a directional move will occur if the price can get and reclaim above 16,800. That directional move will take us above this entire chop zone over here. Okay, it will allow us to retest this rejection point and support point we found around the early November at the start of the month. Okay, and of course retest is 17,300 resistance. Breaking through there will be the trigger for a continuation higher to the major market-wide resistance. 18,163 is a market-wide resistance. It's not a resistance specific to Bitcoin, it's a cryptocurrency market-wide resistance. The reason I say that is because not only does a 18,160 level, I'm going to go ahead and write it, 18,165 level, determine or dictate, or represent, should I say, that massive support level we held and broke down eventually through about June to November. We're looking at 5 months, a 5-month long support level. That was 18,165 level over here, but it also represents that lower to upper resistance zone on the total cryptocurrency market cap. So if we do push up to that level, we will see the total cryptocurrency market cap enter major resistance, the market will enter market-wide resistance. So that is the upward move. We are expecting that to occur if we can reclaim 16,800. The first target on the long will be here. The second target on the long will be anywhere between that point up to here. Okay, so that is what we're looking like for there to the upside, of course. And we'll bring up some technicals in a second after the structural analysis and talk about what are the chances of us actually seeing that occur. And of course, guys, to the downside is a lot more obvious as it is in a downtrend, so we can extrapolate that downtrend a lot easier. If we are going to be heading down and losing the support level, and again, to retest the support level, we do need to lose its uptrending support line. We will see a continuation back in this zone. I do not think we will hold this level again, mainly because the total cryptocurrency market cap will be breaking through that lower support level if Bitcoin does meet that level again. Altcoins will be bleeding more. The total cryptocurrency market cap will have lost this level as Bitcoin goes ahead and approaches or enters this support zone here. And as we already know, the total cryptocurrency market cap is leading for what Bitcoin does. It is again representing the entire market. If we do lose this level, we can see that continuation to 13,900. Now, 13,900 is a major support level. As you can see in this chart over here, we do have this local top here. We have this conversion point. And again, we've seen this point act as major resistance. The reason we know that is because we had a lot of consolidation and compression just under resistance. Usually when we have a lot of compression and consolidation and upwards consolidation just under resistance, we are priming ourselves for an explosive breakout as what we saw. But as we can see in the VRPV over here, the 13,900 level is met by a pretty large roadblock in the volume over here. We do have this chunk of volume that extends down to about 12,000 before we reach that major volume range, which extends from 12 to about 9, okay? So that will be the next bearish target for Bitcoin if we do happen to break through that lower support level we have developed on the Bitcoin chart at 15,500. Very key stuff. Let's go ahead and take a look at the technicals now on the smaller time frame. Then we'll answer that question and then we'll go to the large time frame to finish off. So really quickly, guys, how you should be trading right now. Again, as we approach apexes, you shouldn't be taking too many positions, okay? You should be more short now as we're at resistance than long. Again, your shorts should not be entering now. You should have actually already entered shorts around about that level, maybe just under that support line. Right now, we are waiting to see what occurs. Directional moves are the best time to trade. Wait for the trend to flip, okay, or confirm a continuation, then take your positions, okay? You can take them in anticipation at resistances or supports with tight stop losses if you please. Right now is a waiting game for that next move, okay? So we're going to wait and see what occurs and then react. So let's go ahead and bring up some technicals. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to 4,000 $163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Let's see what this trend is actually looking like in terms of strength. So here is the 4-hour chart, and we're going to go ahead and delete everything really quickly. We can see our market cipher A. Again, the market cipher A is a combination of smaller and medium time moving averages. If you want to copy my settings, here they are here with the 50, 32, 28, 26, 22, 17, 15, and 4. The reason I use these indicators or these specific moving averages is the way I like to imagine this is somewhat of a channel. Okay, and it's going to make a little bit more sense when I explain it on a larger time frame, and then we'll come to a smaller time frame and discuss what I mean by that. So if we take a look at this phase here, we have three things we're looking at, and I'm going to draw them out. With the 50 EMA, we have the price action, okay, and then we have the lower range, and then we have the smaller time frame moving averages here, okay, as a range. So generally what we see a price action move between the lower ranges of supports, okay, reject from the smaller time frame moving averages, or push into the smaller time frame moving averages and reject, or if they push through the smaller time frame moving averages, we expect a move up to the 50, and vice versa. If we go from the 50 through the smaller time frame moving averages, we can expect a price move down to a new support. As you can see over here, we push up, okay, into the smaller time frame moving averages, fail to actually get through them, we reject down to support. In this instance, we actually break through them, we push up to the 50, okay? That's just one example of how you can use the moving average combination to gauge the trend, to gauge the strength, and to gauge short-term continuations. But as you already know, guys, the main reason we use this is for compression and expansions. Expansions, compressions, okay, expansions, and then breaks and continuations if the trend see it fit, if the structures see it fit. Again, structural analysis is very important. If the structures do meet resistances at the point of these trend flips, we can still see rejections. Very important to keep in mind, guys. The structures will determine where the prices actually go, more so than the technical indicators. So for example, in this scenario here, we did actually have the trend flip positive, okay? According to the 50 EMA break, the price is over the 50 and the smaller time frame averages, but we had this downward sloping resistance here, okay, which we actually rejected on and actually continued lower. So the structures will always determine the price action or where it goes. The technical indicators will determine the strength of a trend and what the probability of us moving. So let's go back to that smaller time frame and have a look at this with these moving averages and see what's going on. So what we can see on the smaller time frame, again, nothing more than a sideways consolidation. Nothing more than sideways consolidation as of now. On a very small time frame, on hourly, we can see the price is coming down. It's testing this 50. Again, the longer it tests this 50, the more chance it breaks down. We are expecting if we do get below this 50, we will break down and continue downwards, and that will take us to about 16,300. Again, we will need a significant bounce here. It looks like we're printing a hammer wick. We'll need a significant bounce here to reverse that, but it's looking like that trend is starting to weaken, and that's normal. Remember, we have just seen a breakdown, all right, fake out, we can confirm there's a fake out, a break back into this consolidation phase. And the reason the fact that we're weakening this trend now is because we broke into this consolidation in a directional uptrend. So as we now compress sideways, we are still in an uptrend, but the sideways compression is going to be weakening the technicals on that uptrend, suggesting a potential breakdown. So again, you can have confirmation biases, or you can allow yourself to have these biases without understanding why this information is showing. It's very important not to overweight that piece of information or apply too much significance to it. We have now applied context. So always with technical indicators, it paints the story, but without the structural analysis. That is why we always do structural analysis first on this channel. You need to paint this context. You need to paint the environment, you need to paint the picture, and then you overlay your technicals to help you understand what is going on. So that is our first one. And of course, if we go to a 4-hour chart, we can see a little bit more over here. We actually did fail, guys. We got rejected from the 50. We're back under the 50. We're retesting a smaller time frame movements. As you can see where it's sitting, pretty much corresponds to the hourly 50. If we do lose that level, we are losing those smaller time frame moving averages, and we can expect a continuation towards the downside. So it's looking pretty grim here on the 4 hour. It's never really nice to see these rejections on the 50 like that on the larger time frames, particularly in these consolidation phases. We do want to see clear breaks. Okay. Again, confirmation that we move upwards, will be reclaiming this high over here, which is 16,800. Very, very simple stuff, guys. Let's go ahead and move on to that community question, and then we'll come and talk about the larger time frame again. So that community question we posted just prior to this. I'm just going to go ahead and bring back my chart because I think it's going to be handy. Here it is. Was, what do you do to help with being patient during trades? That's essentially what you're asking. So I think the best way to answer that is, there's two things really. And the one I use, and this is kind of what I use, is all about your understanding and I guess your mindset. Because what causes you to be panicking in a trade is your mindset, right? What causes you to be impatient is your mindset, it's your emotions. What causes you to be impatient, again, mindset, emotions. So what will cause you to be able to control those impatient feelings? It will be your understanding of the market, and your understanding allows you to develop a stronger, more resilient mindset. So if you understand that you just need to trust the charts, do your analysis, set everything out objectively, have everything planned, and trust your trade, then you're able to hold that trade and go actually allow that trade to develop to fruition, regardless of if it's a win or a loss. Okay, but I think for me, I did answer you actually a little bit over here. The main thing for me is, I guess I don't really have any expectation when I trade. I understand that I don't control the market. I'm simply just jumping onto the trade and going along with the market, basically going for the ride. So when I realize I don't control the market, and regardless if I want the trade to work out in an hour or 4 hours or 2 days, what I want's not going to impact the trade. I just have to go off the charts, go off the analysis that I've made, and with my calculated analysis, I have to then apply my risk and decide how much money I'll put in, and obviously have my risk set out and then allow it to develop. And it's not a rush, because there's no rush to make money when trading. Every day's a new day, every trade's a new trade, and there's always new opportunities around each corner. So the moment you realize that every trade is a new trade and every day is a new day and there's always another opportunity, you're not going to feel as rushed to jump into every trade. You're not going to feel as rushed while in trades. You're not going to feel like you're really missing out. And I feel like that FOMO, that fear of missing out, is what causes people to be impatient in the market and potentially jump out of trades too soon, potentially jump into trades too early, and potentially take a risk that they shouldn't be taking. Anyway, let's go ahead and go to that larger time frame and do an analysis. So we're going to utilize that moving averages again on the larger time frame. This is the daily chart. We'll go ahead and bring up our moving averages. As we can see, some key points of resistance over here. But again, guys, technical indicators, they don't mean much without context. So let's apply some context first to help us kind of navigate these indicators we're about to talk about. So here is our macro bear market resistance. This is our bear market resistance. So as we saw before, we saw breakouts of the 50, push up, trend is positive, but we get hammered, we get rejected, because structures determine direction more than technicals, okay? Technicals will tell us the trend strength and the probability of continuations, but structures determine whether a price actually follows through and continues or not. So we are seeing periods here where we have these breakouts, but we have these rejections. More important on the 2-day. On the 2-day, we saw a breakout of the 50 here and a strong rejection. We saw a breakout of the 50 here and a strong rejection. What we're looking for, guys, for reversal on this is a breakout of this downward sloping resistance plus a break over the 50 EMA to confirm that this breakdown is actually completed and will enter a new trend. In that scenario, we'll have broken the structure, the downward diagonal resistance, and we would have positive trend strength. And we can go one step further by adding a RSI. We can add the momentum to this analysis now. If we go to a larger time frame, such as a weekly chart, we can go ahead and input our RSI resistance, our momentum resistance. And again, the RSI defines velocity, speed, and momentum of price action. As we already know, if you've been following the channel already for a while now, momentum is one of the largest drivers of price for price action. There's positive momentum, we're much more likely to see a drive in price. And it doesn't really matter where the RSI is sitting. What matters is the shift of the RSI. The shifting momentum is more important than where the RSI actually is. And that's why divergences are so effective when trading. What we're seeing here is a downward trending resistance on the 7-day, on the weekly for the RSI. What we're seeing here is a downward trending resistance on the Bitcoin chart. Waiting for a break out of this, as well as this downward trending resistance on the Bitcoin chart having positive momentum and a positive break again, will confirm that breakout of the bear market. So if we're looking for the bear market, guys, we're looking for 3 things here. RSI break in conjunction with the larger time frame break on the diagonal, plus we're looking for a 2-day break on the 50 EMA in conjunction with a break of diagonal, okay? In terms of macro structure, guys, obviously technical indicators are going to be very bearish right now, particularly if we go to a larger time frame over here. We have been in a downtrend, therefore a lot of these technical indicators we look at are going to be lagging, are going to be indicating again we are in an aggressive downtrend, because we are in an aggressive downtrend. But as we start moving to a smaller time frame, we can see these moving averages start to catch up with the price action, and again they are lagging still. So we're never going to be able to predict the bottom. Indicators can't predict bottoms. Bottoms are defined by supports, okay? So looking for supports, we're looking at the VPR, we're looking for volume ranges to predict these bottoms, we're looking for structural levels that have held true over long periods of time, like indicate bottoms, but supports can confirm bounces, confirm trends, and confirm reversals. Anyway, guys, I'm going to leave it there. I hope you enjoyed today's video. It was quite a long one, but with that being said, I'll catch you tomorrow. Cheers.